Good morning, everyone, and welcome to the morning market analysis and trade plan setup for Monday, September the 30th, 2013. It is the start of a new week, and it is the end of a month. My name is Doug McKay. If you're watching this on YouTube or you're a visitor, Quantum Leap is a Skype room that's been around for about 4 years, and we come together each morning and do a market analysis and trade plan setup for our trading day, as well as we have a private chat room. If you're interested in checking it out, you'll need a Skype account, and you can send a contact request to Doug_McKay. I'll be the one in Windsor, Ontario, Canada, or you can send me an email to dm@m4connects.com, or call me after hours, or leave your phone number and I'll call you back. Each morning we start with a morning review, and we start with the very basics of reviewing the key numbers and the key levels that we collect in our homework sheet, and then we put out what we call our QLTP, which is a ladder of all these different levels. If you're watching this on YouTube, you might want to skip ahead until we get into more in-depth chart analysis, but we create the routine to get ourselves ready to trade for the day. Of course, before we start anything, we have to get the disclaimer out of the way. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves the risk of loss. Please consider carefully whether futures or options are appropriate to financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future returns, and any trades that you see in Quantum Leap are for education purposes. Please trade your own plan and do your own due diligence. Okay, so let's get right to the numbers. Of course, we had a big gap down, and we're going to talk about that. But our year open is 1443, way below us, as well as our low is in the 1400, so we got nothing to worry about there. Of course, the new year high, all-time high, and month high is 1726.75. We opened the month at 1640 and a quarter. We're now trading, about the middle of the distribution right now. Our month high is our year high. Our month low 1630.75, and we opened the month at 1685.50, and we're now trading below that. Our previous month high 1705. Previous month low 1624.75, and close at 1632.25. Last week we opened at 1706.50. We had a week high at 1707.50 and a week low at 1680. This is our flip over day, so we don't bother with the previous week because I just quoted it. Our intraday numbers: Globex on Friday opened at 1694.50. We had a high of 1695.50 and a low of 1682.75. And then we opened the RTH session at 1683.75 for an open auction out of range. We're going to have another open auction out of range today. Whether it turns into an open test drive or an open drive, we don't know yet, but we will definitely be out of range with this huge cap down. We broke the IB to one side for a normal variation. Our opening swing high Friday 1685.50, opening swing low 1681.25. It's going to be interesting, these two numbers, so write those numbers down, because if we do rally from the 70-75 area, first target's going to be that 80 and a quarter, and then these two numbers just above. So the 4 1/4 point opening swing. Our initial balance high 1685.50, initial balance low 1680 for a 5.5 point initial balance. Our 1230 number was lower at 1684.75. Our RTH high was lower at 1687. Our RTH low was lower at 1680, and our close was lower at 1686.50, and the VPOC was lower. So other than this, one day, most of these numbers are still trending down. Our range for Friday, 7 in the RTH, 15.5 in the full session, and 12 3/4 in the Globex. They're going back to this I want to use the word trend, but they're going back to this tendency lately of making these big moves overnight in the Globex, and then opening out of auction. And that has been going on every time we keep making these new highs. We have the big moves to the downside during the Globex. So it might be something to consider to start watching the Globex and trading it for these larger moves. Our full session high, 1695.50, was put in the Globex. Our full session low at 1680 was put in the RTH. And our 20-day ATR is running 12 3/4, 15, and just under 8. Our Globex open last night, which is the beginning of the week, at 1675. Our European cash close on Friday at 10:30. All numbers in here are central, 1683.75, and our value area high, 85.50, value area low, 82.50 for a 3-point value area. And we broke the IB to the high side after going down and testing that 80 1/4 the CHVN that was our big target below, and went up and broke the high at 936 inside of the pocket. Our ETH high 1686 1/4, ETH low 1685, and settlement was 1685 1/4 for a 1 1/4 point extended session range, which is just under the 20-day ATR. Volume was 1.2 in RTH, 1.4 in full session, so normal volume. Going over to the daily report, didn't really make any changes in the CHVNs or CLVNs, are pretty well defined. LVN that you want to pay attention to from Friday would be 84 1/4, but this 81.25 is going to come into play as well. The took out a whole bunch of naked crosses overnight, so we're going to redo and look at what we've got open on naked crosses. We actually don't have a lot of naked crosses open, and naked cross, for those that are new here, is where I use the 9 EMA and the 20 SMA, and we watch them on the 30, the 15, and the 5-minute intraday, and that's where the two MNEs cross each other, and price action moves away from that and leaves it unauctioned or naked, and the market has a tendency to come back down there and re-auction, retest that price level, and we use those as targets. Our naked VPOCs, we took out the 1680.50 and we added in 1685 near the end of the day. We don't have any real news today. We had Canadian GDP just before we started. We have Chicago PMI at 845. Going over to the trend charts, we like to look at where we are in reference point to the different trends and the different time frames. Of course, the monthly trend is very much still intact, very strong, good separation and good slope of the 9 EMA and the 20 SMA. We're trading in the lower distribution of last month, but we're still above the close and above the low. On the weekly, well, we talked about the fact that we are possibly forming another head and shoulder pattern, and that we could get a island top. If we gap down on the weekend, well, here we are. We gapped down on the weekend, and we created ourselves a island top. So be interesting to see how this week plays out. If we go up and fill that gap, or we leave it as an island top, and can start calling a possible interim high right now and see some lower prices come into play. On the and again, we were the first sign of weakness that we were given. Just if you've been watching these videos or you've been attending the sessions, we talked about the fact that we had that first close on the weekly below the 9 EMA 3 weeks ago, 4 weeks ago now, which was the very first close below the 20 SMA all year. So that was starting to show us some weakness. Going to the daily, well, you can see that we've gapped down, we're closing below the 9 and the 20. We're coming in for an MA hug here, which is a decision point, and we'll see if we come up and test the MAs from below. A test to to them is going to bring us into that 84, 85 area that I said to keep an eye on, and we'll take a look at that on the composite chart. Going over to the geometric charts, again, the big target below with the breakdown of the center line of the modified shift fork. The energy point below is down here at that 1653, 1654 area, and we're currently trading right in the middle of the lower channel of the upward sloping fork and coming down to test the center line of the opposing downward sloping fork, which would today would bring us down to roughly around 1657, 1658 area. So that's also an area you want to keep your eye on today. Of course, if we come down and we hit this energy point, we'd be looking for a possible bounce off of it and come up, and we've got the two other energy points at 1683.50 and 16 or 1710 area, with the one above at 1720, and then what I consider to be the target for a blow off top if we had it at 1778, 79 area. But we're seeing some definite weakness coming in right now. Just going over to the intraday to take a look at what that looks like. The 4-hour is looking weak. We've got slope and separation. We've created a tech gap, likely to come and close this tech gap through time and price, and somewhere around that 1675 to 1680 area. We noted this I just wanted to point this out, that we have been tracking this head and shoulder pattern on the 4-hour from when I found it last week, and that target below the measured move puts us down into that 1648, 1649 area, and we'll take a look at that on the composite. But this is starting to we broke the right or the neckline on it, and we've come down, so we do have that measured move to keep an eye on. So definitely the trend is to the downside on the 4-hour. Going to the 30-minute, same thing. We're starting to get slope and separation, and we're trading below the 9 and the 20. So the intraday is still looking weak. So let's go over to the composite. We talked about the fact that we are trying to hold in that 95.50 area, and with the volume coming in from the last 2 days of the week, our microcomposite VPOC has shifted to 1691.75. The big thing was our target below, for ever since we broke out of this balance before, was the three main CHVNs in this distribution zone, with the first one being where the last most accepted price was just before the launch at 80.25, but the overall for the previous balance was down here at 1675 with 1678.25. Well, we came down and we gapped down, and we opened the Sunday session right at 1675 for 11.5 gap, and we're now trading lower at 1671 area. So our gap is going to be somewhere around 14, 15 points depending on where we open up. If I calculate it roughly, that's going to be a half gap fill in around this 1678.50, 1678.25. So right in that CHVN. So if we can find some buyers and get back inside of the value area of the prior microcomposite where we launched from, then I'd be looking for a rotation back up to 75 with a immediate target above that at 78.50. and then the the bigger target at 1680 and a quarter, and I expect to just chop around in here for a couple days as they try to determine the undetermined fair value and mature this distribution zone to see what's the most accepted price. The last time we were in this area it was 75, but the overall is 80 and a quarter. So we'll see what happens. Below you've got the 68.75. You've got the CLVN, which is the major line in the sand that we keep talking about for the last week, down here at 16.65. Below that we have the prior microcomposite VPOC, where we launched from prior at 63.75, and just below that you have 63 and a quarter gap fill. From this particular breakout day right here. The close on this day was 1663.75. And then below that you have 57, 55, 51, and then remember our measured move on that head and shoulder brings us all the way down here to that 1647, 1648 area, which are two microcomposite VPOCs. The overall balance that we are in from 0515 through to 0996, and then the last area just before we launched, the most accepted price before we broke out of it was 1647. So that is your major target below. Let's take a quick look at the overnight and move our numbers over to the intraday chart. Set up our trade areas. So overnight we gapped down. We opened up at 75, which happens to also be our overnight Globex VPOC, which is no surprise. So we have a overnight VPOC, which I don't think is going to change. We're going to bring ourselves down out of balance here at 75. Our overnight low so far is 69 and a quarter, 69.50. And our overnight high is 76 and a quarter. So below us we have the 63 area, which is going to be the gap close at 63 and a quarter, a naked VPOC, the former microcomposite VPOC. So that's your big target below. This will definitely be a trade area to see if we pick up buyers there. We're going to open up out of out of range, way below the 1680. So I'd be looking to see if they come down and try to continue the move lower, come down to the overnight low, take out the overnight low for the 96% probability, and then find buyers and rotate back towards that 75. 75 is going to act as a major magnet, but there's nothing really to gauge yourselves around, between that 75 and the 71. So this is really no man's land down here. I'd be very careful trading this, especially with this big of a gap. We could see some sellers come in and step in. I will be trading 65, 75 for a possible support area. And if we break through, going down and the target being that 63 area, with the other side of balance being down here at 1660.50. And then again, a move below that would bring us into the 50s and into that the major target below at 1647. Above, you've got not much before 75. You've got a minor CLVN at 76. The half gap fill at 78.50. I'll be looking to do business here in the 1680 area, but I'm really going to have to sit on my hands in this area If I see some strong conviction to the upside, I'll try to take long, but there's not a lot of edge here. If we look at the Keltner Channel, a test of the lower Keltner Channel will bring us down to 67. A test of the center line is going to bring us at 73. So at 73, if we get back above the Keltner Channel, I might use that as a move into the 75 and hopefully a half gap at 78.50, 78 and a quarter, depending on where we open again. And then, the test of the upper Keltner Channel right now will give us 79.50. So just be patient today. Let them, let them settle this out. We're in a new, we're out of value right now. We broke down, and we have to see whether or not they find some buyers, or whether we continue our price discovery down. So just don't be anxious to pull the trigger until they give us clear definition. If you come in with an open drive back up towards 75, that's going to be, the best scenario would be to come down to this 69 area, 67 lower Keltner, get a Renko reversal, and open rejection reverse, and shoot up with conviction with the buyers up to 75. That would be the best case scenario. But I have a feeling we're going to just open up and chop around. Let's take a quick look at gold. Gold is still trading in this balance area. The microcomposite VPOC is now 25.70. We're trading just above that. The line below that you want to possibly take a short off of is this 13.16.40. It's close to that 13.70 we were watching in this area prior. A break below that should bring us down to test the value area low at 13.08.40, just below that former microcomposite VPOC at 13.09. And then target below that will be the 13.04.30, swing low, the last fractal low that we had with the CLVN, and if we break through that, look for a move, of course, to the 1300 level. The lower range of the microcomposite at 1291, but the big target below is still that 1284.90, and that's where I expect the the strong buyers to come in and give us a good run back up. If we can hold above the 1316.40 and not chop around this 25. The upward targets today will be your value area high at 1341 area with CHVN right there. The other side of balance I would consider being at this 1351.70. Above that, look for a move into that 63, 66 area, and then the big number above, up at that 1386, 88 area. That's what I'm looking at on gold, and that's what I'm looking at on the S&P. Over to you, Howard.
Thank you, Doug. I'm going to start out looking at the monthly chart. So today is the last trading day of the month. And last month we had a dark cloud cover, which is a bearish pattern. This month, if we finish right in this area, we would form a star, which is also a bearish pattern. Now, we did not have follow through on the dark cloud cover thus far. We did make a new high this month, and that gave us our fourth touch of this long-term monthly fork that we've been tracking. So we had one here in May, July, and August, and now September. We've had rejections each time. With this month, unless we have a huge rally, we'll have another bearish indication for the second month in a row. And have to see how the market plays off of that. So if we go to the weekly, so 2 weeks ago we had a shooting star, and then last week we had a bearish engulfing candle. So we had the shooting star followed by a bearish engulfing candle. So that's 2 consecutive bearish candle weeks. And now we have this gap lower, and as Doug pointed out, we're forming this island top. So thus far we're confirming the bearish indications on a weekly time frame, and currently we're testing the weekly 9 EMA. And that, for the most part, has held through the Globex session after the gap down. So that'll be a key level on a weekly basis to see if it holds as support or not. And then below there, down to about 1656-ish, we have the weekly 20 SMA, and both of them have leveled off after the last 2 weeks of price action. So looking at the daily, we had our first 5 consecutive red candle performance recently. We did have one green candle that closed above the 9, but followed by another red candle that closed back below the 9, tested the 20 SMA on the daily with some rejection off of that on Friday. And then starting our Globex session last night, we gapped below the 20 SMA and also below the 50 SMA here, which is the cyan dashed line. So even though we have the most consecutive red candles, the magnitude of the move lower was not as large as some of the prior moves lower with fewer candles. But it remains to be seen if we continue to see weakness, and the 50 SMA will be our initial resistance line. We tested it after the open last night and rejected. Just above that we have the daily 20 and the daily 9 as the next points of resistance above that. If we continue staying lower, in this area, we'll eventually get a 9 crossing below the 20. That'll probably take a couple days to happen unless we have a very steep sell-off. So going to the market breadth, we see the Dow transports here above and the Dow industrials are still tracking well with each other. So if we look at the sectors, we have a little bit of a mixture of activity here in the sectors. We have retail that's been up to flat, as has been consumer discretionary here in the blue. We have industrials actually a little weaker. A lot of these on the lower end have been showing more weakness. So we have a little bit of a mixed picture in the sectors. If we look at our advanced decline versus up-down volume, we see that we've been moving lower with price. We had, on that one positive day, we did have a move back up, but after Friday, we've been turning back down, both in advanced decline and up-down volume. On up-down volume here in the lower chart, we are pretty much right at, just slightly below the break-even level of 50%, but it's pretty much right at 50%. All the other indications are still above the break-even level, but we see that over the last couple of days, well, the last day we did continue lower. So the market breadth has been getting weaker with price, and we're getting close to the break-even level on both indications. So next we'll look at our Clt report. So let me open my spreadsheet. So here's the Clt report. You can see in yellow here, the small specs greatly reduced their long position. The large specs increased their long position. And the commercials slightly increased their, well, decreased their short position, I guess would be the better way to put it. So, you know, the small specs have, you know, while price was going down, they were getting longer. And then as price started going up, they started stabilizing. And now they've, you know, greatly reduced their long position. Now, one other thing I thought I'd show in the Clt reports is this chart here. Might be a little small. Not sure why it's doing that. This red line here represents overall open interest. We can see that from last week to this week, overall open interest came down quite a bit. It's down to 2.6 million open interest as of last week's report, and that's down from 3.3 plus million the week before. And as I saw that, I was noticing sort of a cyclical pattern in that it turns out that each quarter, which we're just about to end here, we see this reduction in open interest. And all of these big reductions do show consistently at the end of each quarter a reduction in open interest. So I don't have an explanation to that. But I thought it was an interesting observation. As far as large specs are concerned, if we look at the numbers, they actually reduced the number of long contracts, and they also reduced the number of short contracts, but they by far decreased their short contracts by a larger margin. So their open interest is down significantly, but the fact that they reduced their short contracts actually made their long interest look larger. But in actuality, they have fewer long contracts than they had before. It's just that they're less short. So those are just some interesting numbers I found. That's really all I can tell you about it right now. So as an observation. So with that, Doug, that's all I've got. I'll turn it back over to you.
Thanks, Howard.
About 10 minutes left.
Okay. Just a quick note that we did get just got a VPOC shift down. VPOC now is at 71 and a quarter. And looking at just looking at this, what did I just do with it? Looking at this microcomposite from here, we got a double distribution between the 75 and the 78 area with a microcomposite LVN at 77. I'll actually call it 76, 75. So I'm going to add another trade area, which if we can get through the overnight high, it's going to be a target above if I'm in a trade, but it's also going to be a trade area, because if we break above it, I'm going to be looking for that move up to the half gap fill at 78 79 area, and of course the move to 80 and a quarter in the test of the RTH range from yesterday. So I just wanted to add that in with the shift of the value. I am expecting a test of this this overnight high, or the 75, at least from below. It's the biggest value just above us. So, but you never know. We have to wait and see what the market does when it opens up. I'm going to go ahead and leave the room open today. It's the last trading day of the month, so I'm going to leave the live room open, and that way we can just do market observations. I am still running my swing short that I've been running since my initial entry was up here at 1725.50. My current Theo, I had a couple rough days trying to add on to it, so I gave some back, but my running Theo right now is right close to where my initial entry was at 17 and a quarter, and I'm running one contract right now. And all my shorts will be in my swing account, and then I'll use my other account for my longs. Just take a quick break, go get a fresh tea, and come back for the open.